The Ethereum community is dividing over the reversible transactions proposal. While the proposal was approved by the majority of voters, there are a few opponents. Some adhere to the philosophy that code is law, and feel a bailout is antithetical to crypto. In June, a hacker managed to steal $50 million in Ether. However, the attacker claimed the actions were legal. While the proposed change would remove the middleman, it does not remove the need for an intermediary, which would be needed to reverse a transaction. Instead, the reversal control would be placed on a higher layer, such as exchanges and companies, above the base layer. In July, the Ethereum network was hacked by bad actors. The community then voted to reverse the hack, which resulted in the creation of the Ethereum Classic cryptocurrency. The two cryptos share the same underlying algorithm but have different philosophical perspectives. Some members of the community believe that reversible transactions are the best way to ensure a secure platform. The Ethereum community is divided over whether to adopt reversible transactions or not. While core devs are trying to ensure a smooth transition between the two, some miners are advocating a new hard fork. The proposal, led by crypto investor Charles Guo, would introduce a new blockchain based on POW. This new network would also launch a new token called ETHW. The Ethereum 2.0 project is a complex undertaking with many different facets. There are several ongoing changes to the software and network infrastructure, including sharding and reversible transactions. The latest update, called Serenity, will go live on December 1, 2020. While its effects won't be felt until several years later, its primary purpose is to lay the foundation for the Beacon chain, the main coordinating mechanism for Ethereum's POS blockchain. Reversible transactions are a controversial topic among Ethereum developers. The proposal is aimed at enabling reversible transactions, which means that transactions will no longer require a transaction confirmation. Ethereum has gone through several stages of development, each of which incorporates more properties and features. As of this writing, the Metropolis phase is still in its early stages, and it will be implemented in 2 phases. The hard fork that took place at block 2,675,000 resolved the issue of replay attacks and clear state. The hard fork also created the stablecoin ERC20 token, which is backed by fiat currency, precious metals, or other cryptocurrencies. Ethereum 2.0 is the next step after Phase 1. It is expected to roll out in phases, with Phase 0 launching the first beacon chain of the Ethereum 2.0 network in 2020. This will enable proof of stake, sharding, Ether accounts, and the ability to execute smart contracts. The phase will also help Ethereum scale, as it will be split into 64 shard chains. The Serenity update package went live in December 2020. The effects of the update will be felt years later, but the main purpose of the upgrade is to lay the foundation for Beacon Chain, the main coordinating mechanism of the Ethereum 2.0 POS blockchain. The merge is a massive change in the way the Ethereum network functions. It marks the largest shift in the underlying operations of a blockchain in history, with wide-reaching effects. If successful, the new network will unlock the revolutionary potential of decentralized technology. The Ethereum community has been split over the proposal to introduce reversible transactions. This proposal would essentially remove the immutability of the blockchain, something many people find problematic. The majority of the Ethereum community voted to reject the proposal, but a small minority has maintained the original blockchain and christened it Ethereum Classic. The two blockchains are similar in functionality, and most of the major features of Ethereum are present on Ethereum Classic as well. The Ethereum community has split over this issue several times in the past, with some of them contentious. Some community participants harbor ill will towards other participants, which can negatively impact adoption and use of Ethereum. In the case of reversible transactions, there are other ways to implement the feature without a hard fork. Alternatively, reversible transactions would allow institutional investors to purchase Ether. This could potentially encourage institutional investors to adopt the cryptocurrency. Institutional investors are currently barred from purchasing tokens based on proof-of-work systems, but this change may result in greater institutional adoption of Ether. While many of the Ethereum community members support the reversible transactions proposal, they continue to operate the original Ethereum chain with the old client software. As a result, they are having problems with transactions on both chains. The original Ethereum chain is listed on the Poloniex exchange as etc. The Ethereum community is dividing over whether or not to allow reversible transactions. The reversible transactions proposal is an important issue, as it would prevent fraud and exploitation of the system. However, it also has risks. It could negatively affect the use and adoption of the network.